Okay, welcome back everyone. Today we're going to be talking about how to gain a directional edge and find explosive option strategies off of that view of the directional edge that you're going to be able to gain from the things that we're going to teach here today. So my name is Tony Zhang. I am the Chief Strategist here at OptionsPlay, and this is actually one of my favorite subjects to teach is showing you guys how to use the tools that we provide here at OptionsPlay to help you quickly gain a directional view on the stocks and ETFs that you want to look at, and how to leverage that immediately into an option strategy so that you can actually profit from that individual view. The reason I really like talking about this specific topic is because this really embodies why we started this company. As a trader myself, I used to be the type of person who had 4 different monitors on my desktop to keep track of all the different things that I needed to place trades. And it just hit me at some point that we needed to simplify our lives. It got to the point where I was looking at so many different indicators and different research tools to gain a view for any given stock or ETF that I'm looking at, and I wanted to find a better way to trade. And that's really how we started OptionsPlay. So a lot of things that I'm going to show you guys here today is really taking all the things that I've learned as a trader myself over the last 12, 13 years and distill it into indicators that really help you guys shave your research down from a few minutes down to a few seconds, and then show you how you can instantly leverage that into profitable strategies using options. And options is really one of the best ways to leverage a directional view because it allows you to apply leverage when you are correct on your views while still limiting your risk when you're wrong on your views. So this is really why we want to look at the indicators that we have provided here to give you that directional edge and then show you how to actually leverage that into an options trade. So for those of you that are brand new to OptionsPlay, this webinar is recorded. For those of you that have seen some of our webinars, welcome back. Today what I'll do is I will do about 20 minutes using the slides going over what we have to show you in terms of helping you gain a directional view. And then what I will spend most of my time on is actually using the tool itself to show you how to actually look at individual stocks with some live examples and show you some option trades to make off of those. This webinar is recorded, so after this we finish, you're going to be receiving both the recording as well as the slides. So on the slides, I have specific links that are very important for those of you that are relatively new to OptionsPlay. We have links to our previous recordings. We have our daily trade ideas, which is something I want to touch up on today because I've gotten some questions recently that I want to address as to how to best utilize the daily OptionsPlay ideas that we send out every single day. As well as some important links on how to subscribe to OptionsPlay and follow us on YouTube. So today, what I really want to do is spend the time talking about this concept of paralysis by analysis. There's just so many things that we look at as traders, and not only in our trading space, but also pretty much in all other aspects of our lives. We are simply bombarded with information. So the question is, how do we actually distill all that information into something that's useful? And that's really what I want to spend the time talking about. And what the indicators that we use to help you gain your directional view is trend and relative strength. So I'm going to talk a little bit about what each one of those mean. I'll talk a little bit about how you can use the two in conjunction with each other to find your directional edge. And then what I want to do is go through some bullish and bearish examples to show you how to actually leverage these to gain a directional view on an underlying stock. And I have a bunch of stocks for us to look at so that you can see what I mean and learn from it. And this webinar is recorded, so I highly recommend that if you're brand new to this platform or if you're brand new to trading, make sure that you take the time to view the recordings. It's really helpful to help you get started, and you might have to go through the recording a few different times to follow us along. And then, like I said, I want to spend most of my time actually going through some real examples so that you guys can better understand what I'm teaching here today. Now, before I move on, I'm just going to launch a quick poll here. I just want to get a feel for what tools do you currently use to determine the trend of a stock or ETF in your current trading today? Do you use technical analysis, fundamental analysis, maybe statistical analysis, or maybe some other forms of analysis? Where do you primarily use to gain your directional trend or directional view on the stocks that you currently trade? So it looks like the predominant answer here so far has been technical analysis and charting. Almost 80% of you are saying that you use technical analysis. About 15% of you say fundamental, and about 7% of you are saying other. Okay, so great. So that means that most of you seem to be familiar with the concept of technical analysis. For those of you that are fundamental analysts, I hope that you're also able to learn something here today, because what we're teaching here today really overlays very well with whatever fundamental analysis that you're doing. You can use this as a quick gauge in addition to your fundamental analysis to give you a better idea of timing, because that's one of the things about fundamental analysis, is that you really don't get a feel for timing. And that's really what some of the indicators that we're going to show you here today will help provide you with, okay? So we've determined that many of you use technical analysis in your trading. Great. So let's actually look at what we're going to talk about here today. So first of all, I just want to address this thing that we have in our life, these information and data overload. It seems to happen in pretty much all aspects of our lives now. We have access to real-time information across so many different sources for pretty much all aspects of our lives. And this actually, as great as that sounds, many times from an investment perspective creates more problems than solutions, because the more things you look at, the more possibility of potentially conflicting signals that you get. So you might look at one service that tells you a stock is bullish, then you look at 3 other services and you get mixed results. And what ends up happening is you end up being more confused than having the real answers to what you're doing. So what we're proposing here at OptionsPlay is really the concept of keeping things simple. And when we say that, what we're really trying to do is simplify your life and not necessarily make it simple. And there's a difference between the two. And what we're proposing is using 2 different indicators to simplify your life. Number one, we want to look at trend analysis, and then we want to look at relative strength. Now, before I explain these 2 indicators, I just want to ask a quick question. How many different indicators or tools do you use currently to determine the trend of a stock or ETF? Are you using multiple ones, just a few, or, I just want to get a feel for roughly how many different indicators or tools are you using to determine the trend of a stock? So it looks like the predominant answer here so far is about 3 to 5 here. So about 3/4 of you have answered that you use 3 to 5, about 1/4 of you saying less than 2. So those of you that are using less than 2, I admire your simplicity, and that is really what we're hoping to achieve here. And that is really the philosophy that we have here at OptionsPlay, is we want to keep things simple, because simple helps you stick to it in the long run. So let's just end this poll here real quick. So as you can see, almost 3/4 of you are showing that you use about 3 to 5 different indicators or tools to determine the trend. 1/4 of you use less than 2, and just a few of you use more than 5. Okay, so that's actually pretty good. What we're proposing here is using just 2 indicators to give you a very clear directional view. So we're saying to look at trend and look at relative strength. So trend analysis is pretty simple. What we're really talking about is predicting the direction, the future direction of a stock or ETF based on historical data. So this is the tenet of technical analysis that we believe that history it maybe not repeat itself, but it certainly rhymes, meaning there are discernible patterns that happen over and over again. And if we study those historical patterns, it gives us an idea as far as what is likely going to happen in the future. So some examples of trend analysis is moving averages is probably one of the most popular ways of looking at trend analysis. Moving averages have advantages to help you smoothing out the noise and giving you an idea as far as what the overall trend is. And more, for those of you that use charting, you might be familiar with concepts of drawing trend lines or drawing channels to give you an idea as far as overall trend by reducing that overall noise. But the goal here is all the same, is to help you identify whether a stock is trending higher, trending lower, or trending sideways. That's what all of these indicators are designed to do. Next, what I want to look at is relative strength. Relative strength is designed to give you an idea as far as comparing the stock that you're looking at or ETF and comparing that to the overall market. Relative strength is a really important tenet of fundamental or understanding market psychology, because relative strength allows you to quantify whether a stock is in favor or out of favor. Because if you think about stocks that are performing above the market, these are the types of stocks that institutional investors want to own in their portfolios in order to beat the benchmarks that they have to beat to keep their jobs, if you will. And stocks that are lagging behind the market, those are causing them to underperform their benchmarks. So those are the stocks that they want to get rid of in their portfolios. And if we think about what really moves the market is real large institutional investors. And by quantifying relative strength, that allows you to understand which stocks are in favor and which stocks are out of favor, which is a really important concept to decide whether this is a stock that you want to buy or sell. So some of the simpler ways to identify relative strength is simply taking the stock price and comparing it to the S&P 500. You can compare it over any period of time and see, is the stock outperforming the market or underperforming the market? That is the simplest way to view relative strength. There are more robust models that have been built over the years, but they all tend to have the same trend, if you will. And the idea is to simply rank a stock using multiple indicators, not just one price performance, but looking at multiple technical indicators across short, medium, and long-term trends to determine which stocks are ranked highest, which stocks are ranked the lowest. Some of you may be familiar with IBDs, probably one of the most famous relative strength indicators. IBD publishes a score from 0 to 100 on every single stock. That gives you a gauge or quantifying the relative strength of that. Zacks does the same thing. Stock Charts also provides a technical rank, all designed to do relatively the same thing with different methodologies or different calculations. So based on these two indicators alone, what we're able to do is use these two in conjunction with each other in order to find a directional view. So now, how do you actually go about doing that? So in order to gain your directional edge in trading, it really is actually quite simple. All you have to do is have a consistent application of trend and relative strength. Now, the reason that we talk about consistency here is because I as a market strategist, have been working with clients for almost 14 years now, and I've worked with clients across pretty much every single asset class. I started in FX, moved over to futures before doing equities and options that I am in right now. And I've worked with clients from fundamental traders to technical traders to statistical traders to all different forms of analysis of the market. And the one thing that I have found over the years that seems to ring true with successful traders is not necessarily what strategy they use or what indicator they use in their trading. It's really about how consistently they apply the same indicators over and over again. So how can we help you gain that consistency? Number one, the best way to help you gain consistency that we find is, when we talk about trend analysis, I mentioned that you can do trend lines, you can do moving averages, and the problem with some of those indicators is that there's too many possibilities, meaning you can use a 20-day moving average, you can use a 50-day moving average, you can use a 200-day moving average, then you can use exponential moving averages and weighted moving averages. There's almost an unlimited number of ways that you can analyze a trend. So when you have those many ways to do it, what I tend to find is that some people will use a 50-day today and they use a 200-day the next day. And what you end up finding is that you get inconsistent results when you're using different moving averages or different methods of trend analysis. So our solution to that is by taking that away from you and using a consistent application day in and day out. So our trend analysis on our platform is really simple. It's just a 1 month and 6 month trend that tells you bullish, bearish, or neutral. So we use a triple moving average to determine the short-term and long-term bullish, bearish, or neutral trends of the short and long-term trends, and we use the consistent application of the same moving averages every single day. So by removing the fact that you have to select a moving average and figure out how to interpret that moving average, we bring consistency to your life by using the same method every single day. And you can just use our trend analysis to gauge what the short-term and long-term trend of the stock is. Next, on relative strength, we calculate a technical score for you. And we do it very simple. We rank every stock on a score of 1 to 10. 10 are the strongest stocks in the market, 1 are the weakest stocks in the market. So 10 meaning is a stock that's outperforming the market the most, and 1 are the stocks that are underperforming the market the most. So this gives you a quick way to quantify both the relative strength and the trend of a stock instantaneously on every single stock, and you know that if you're using OptionsPlay, you're going to have the same methodology day in and day out. That's how you're going to be able to gain consistency. Now, the reason we use the two indicators in conjunction with each other is because trend analysis and relative strength, while useful on its own, it has its limitations. So when you're looking at trend analysis, you might be looking at one stock that's bullish and you might be looking at another stock and they're both bullish. How do you tell the two apart? That's one of the downsides to trend analysis, is that trend analysis doesn't really give you a feel for magnitude, and it really doesn't allow you to compare stock A to stock B. If they're both bullish or if they're both bearish, you really can't compare and figure out which one's better, right? Because there's lots of bullish stocks, there's lots of bearish stocks. How do you tell the difference? Relative strength, on the other hand, does allow you to compare one stock to the next. So you can rank stocks from 1 to 10, so you know exactly which stocks are strongest, which stocks are weakest. The problem with relative strength, however, is that it doesn't really give you a feel for whether a stock is continuing to strengthen or if it's actually weakening. So that's why we use the two in conjunction with each other, because the trend analysis tells you, is this continuing going higher or is it continue going lower, while relative strength allows us to compare multiple stocks against each other. So what I'm going to show you next is how we actually merge these two indicators together to give you that directional edge. So I have 4 different examples here. The top 2 are what we call the trend following methods. So this is the simplest of strategies that you'll find. So what we call the strong bullish stock, these are really stocks that have a strong relative strength. So these are stocks that are outperforming the overall market and they're exhibiting bullish trends. So this is where both the relative strength and the trend line up. And these are the type of strong bullish stocks that we're looking for typically when we search for daily plays or the daily play ideas that we send to you every single morning. On the strong bearish side is basically the exact opposite. This is a stock that has weak relative strength, so a stock that has underperformed the overall market, and it's exhibiting bearish trends in conjunction with that. So both the relative strength and the trends are lining up to be bearish. These are the strong bearish stocks. And we're going to show you how to quickly identify this on any stock that you type in and allow you to quickly type in any single stock and immediately have a gauge for where you think the stock's headed without having to do a lot of additional research in just a few seconds. Now, the next 2 examples are what we call trend reversals. So this is for those of you that are more contrarian traders or helping you just identify when a stock is starting to turn around. So first example we have here is what we call a bullish turnaround. This is a stock that has weak relative strength. This is telling you that this is a stock that has generally underperformed the market. It's a weak stock. It's not a stock that's necessarily in favor with the market. However, it's exhibiting bullish trends. So these are the types of stocks that are probably starting to bottom. So if, let's say, you're short this stock, it might be time to start getting out. Or if you're interested in trying to find stocks that are starting to come around, these are ones that help you identify these are weak stocks, but they're not continuing to weaken anymore. They're starting to turn around. Vice versa, bearish turnaround are basically stocks that have strong relative strength. So these are stocks that have outperformed the overall market, but they're exhibiting bearish trends, telling you that even though they're outperforming the market, they're no longer continuing to outperform the market, and they're starting to turn around. So these are, especially if you own these types of stocks, it might be time to take profits. So that's how you can use these indicators, these 2 indicators in conjunction with each other to quickly identify, is any stock or ETF that you're looking at, is this a bullish stock, a bearish stock, or is it starting to turn around? And we have a bunch of examples using real stocks to show you, to help you understand each one of these 4 different categories. And the way our watch list is built is designed so that you can quickly identify each one of these very, very quickly without even having to pull up a chart. And that's really what I want to spend my time showing you guys here today. Now, before we jump over to the OptionsPlay platform, I do want to talk a little bit about how you find high probability setups, meaning how to use these indicators in conjunction with each other to quickly find bullish and bearish stocks for you to trade. Very similar to how we identify bullish and bearish trade ideas for you every single day that we email out to you in our daily plays. So we take an approach that's called the top-down approach. When we select our stocks every single day, we're not looking at individual stocks first. We're we're always looking at the overall market first. We want to get a feel for, are we bullish or are we bearish on the overall market? We usually use the S&P 500 as our proxy for that. Then once we have identified whether the market is bullish or bearish, we then look at the individual sectors. We look at which sectors are strong, which sectors are weak, and that helps us really narrow down on which sectors and which stocks to look at within those strong and weak sectors. So when we have identified a bullish market, what we're really looking for is a strong or bullish sector, and then what we do is we try to find strong and bullish stocks within that strong and bullish sector. So that's how we can find high probability setups that have the highest chance of that stock moving higher, because everything is lined up. Not only the market, the sector, and the stock all exhibit these bullish indicators. That gives us the highest probability of that stock moving higher. And conversely, when we're looking for bearish ideas, we generally try to do these in bearish markets, or sometimes we don't necessarily have a bearish market, but we may have an overbought market that we feel is starting to correct. And if that's the case, what we're looking for are weak or bearish sectors, and then we try to identify weak and bearish stocks within those weak and bearish sectors. So that is really how we go about approaching finding these high probability setups that we use every single day to find the daily plays that we send out to you. So with that, what I really want to do is jump over to OptionsPlay and actually start looking at these trading setups and show you how you can utilize our platform to quickly identify your bullish and bearish views down to from a few minutes that you might need today down to just a few seconds. So first off, what I'm going to do is I'm going to do a quick introduction to OptionsPlay for those of you that are brand new and have never seen our platform before. Welcome. If you don't have a free trial, you can sign up at optionsplay.com. So our platform itself is divided into 3 sections. We have our trade ideas and watch list on the left. These are fresh ideas scanned for you every single day, and we have watch lists that are pre-built for you, and you can set up your own watch list, which I'll go over here today. I'm going to actually use one of our a pre-built watch list that I have for this webinar today. In the middle, we have our security analysis panel. This is our equity analytics panel designed to give you the snapshot data to quickly gauge the bullish or bearish view on any underlying stock. And then lastly, what I'm going to spend some time talking about here today is how do you leverage that into an actual profitable trade? And that's really where the trading tab comes into, where we provide instant strategies for whether you're bullish or bearish on a stock. You can instantly find strategies on how to leverage your directional view into an explosive options trade. So that's really what we're going to cover here today. So let's start off here on the left-hand side with the watch list. So I've set up a watch list with a bunch of different stocks in my watch list. I highly recommend you to do the same with the stocks that you either own or the stocks that you want to own or you're watching, because what our watch list is designed to allow you to quickly gauge both the trend and relative strength without even having to click on any single symbol. And I'll show you that in 1 second here. So what I usually like to do is I usually like to sort my watch list based on the score. This is that technical score I'm referring to, the relative strength of a stock. Because once I sort my watch list by the score, I quickly get a feel for which stocks are the strongest and which stocks are the weakest without even having to click on any single symbol or look at a chart. I know exactly which are the strong stocks and which are the weak stocks. So let's take a look at a few different examples here. I'm looking at Apple here. As you can see, it's got a score of 9 and the arrows are all green. What that's telling me is that the 1 month and 6 month trend of Apple is bullish, and the technical score is 9, so it's a very strong stock. So this is based on what we were talking about here before. This is what I would consider a strong bullish stock because it has strong relative strength and is exhibiting bullish trends. So if I'm looking for bullish opportunities, these are typically the type of strategies, these are the type of stocks that I would be looking for. So this is telling me this is a very strong stock, outperforming the overall market, and I can see how long the market has actually been in that bullish trend for. So as you can see, I have these trend indicators below my chart. So I can see here back in July 6th, that's when both the 1 month and 6 month trend turned bullish, and we've had a pretty nice run up in that price since that's happened. So not only does it tell me where the current 1 month and 6 month trend is, but also how long it's been in that trend for. Very, very important things to understand when you're looking at these trades, because the longer a stock has been in that trend for, the more you have to be considerate of whether or not it's too late to get into a trade. So those are some of the things that you want to look out for before you place a trade. Next, let's take a look at a strong bearish stock. Here I have GE. As you can see, without even clicking on it, I can see that it's got a score of 2, telling me this is a weak stock. And as you can see, it's red across the board. What that tells me is that it has 1 month and 6 month trends that are bearish. So this is what we consider a strong bearish stock, because it's a weak stock that's underperforming the market. If any of you follow GE, I don't think this is a surprise to anyone. Very weak stock that's underperformed the market, and the 1 month and 6 month trends are bearish. It's been bearish for quite a while. Even though the stock hasn't moved much lower, it's still in this bearish phase. So this is certainly the type of weak stock that you'd be looking for if you're looking for a short opportunity, or if you're looking to buy some puts. You want to find these types of bearish stocks that are also underperforming the overall market to find high probability trades. Now, what we can do is we can now just go through a few other examples. I want to show you a few bullish turnarounds and bearish turnarounds. And once we do that, we can kind of go through the list and show you how easy it is to quickly identify which stocks are bullish, which stocks are bearish, and which ones are turning around. So here I have Campbell's Soup. As you can see, before I even click on it, I see that it's got a score of 3. But it's green across the board. This is telling me this is a weak stock, but the trends are bullish, meaning this is a stock that's starting to turn around. So as you can see on the historical chart, this is certainly a stock that has weakened a lot while the S&P was moving significantly higher. But over and a gap lower, I'm guessing this was on earnings a few months ago, but that's really started to turn around, and that trend really started to turn around back here in around June. So this is really where the short-term trend turned bullish back here in June 15th, and the 6 month trend turned neutral and started to turn bullish here just a few days ago on August 1st. So on August 1st, both the 1 month and 6 month trend turned bullish. So this is actually a recently turned around stock. So these are the types of opportunities that if you're looking for, whether you trade stocks or whether you trade options, you can utilize these tools to quickly identify when a stock is kind of bottomed and starting to turn around. And this allows you to use a watch list without even having to pull up a chart to be able to quickly identify which stocks are in which phases based on your watch list alone. Let's just look at one more example. I have Murphy Oil, or actually let's look at Micron, because I think this is a stock that many of you probably trade or follow. Very high flying stock that did very, very well for a long period of time. But as you can see, it's got a score of 9, but the trend, as you can see, it's yellow and red, telling me that the 1 month and 6 month trend is starting to turn around and starting to deteriorate that trend quality. So as you can see right here on July 23rd, the 1 month and 6 month trend went from neutral to bearish and neutral. But this stock still has a score of 9, telling me this is one of the strongest stocks or outperforming the overall market still. So these are the types of stocks that are maybe topping. Maybe if you own this stock, it's perhaps time to start taking some profits. This allows you to quickly identify which one of those stocks are in which phase, so that you can quickly figure out, am I bullish or am I bearish, or is this a stock that might be time to get out or maybe get in, depending on which phase it's in. So as you can see, what I'm able to do here, once I learn how to use the trend and technical score, once I do that, I can quickly look at a list of stocks very, very quickly and identify which stocks are bullish and continuing to be bullish, like Microsoft. It's got a score of 9 and it's green across the board, versus Murphy Oil, which has got a score of 8, but it's yellow and red, telling me that the trend is starting to reverse. So Murphy Oil, as you can see, just turned negative today. These are the types of stocks that you might be looking for short opportunities on if you're opportunistic. This is really designed so that you can quickly type in any stock and be able to very quickly gauge a directional view on any given stock that you type in. So if, let's say we want to look at Oracle, and I haven't looked at Oracle in a while, I can see it's got a score of 5, so it's relatively neutral. This is a stock that's performing on par with the overall market. But as you can see, the 1 month and 6 month trends are somewhat bullish. So this gives me a slightly bullish or bullish bias, if you will, on this particular stock. And this works regardless of any stock that you type in. You can look at Harley-Davidson. As you can see, a relatively weak stock, but the trend has started to turn a little higher. As you can see, this is continuing to make higher lows rather, and higher highs. So these are the types of stocks that you would traditionally be looking for if you were looking for bullish opportunities. So once you've identified these types of bullish opportunities, that's really where you can leverage OptionsPlay to quickly identify how to take advantage or how to profit from the move on these underlying stocks. And that's where really the trading tab comes in. Now, before I jump into the trading tab, I want to talk about, I want to spend a little bit of time talking about the daily plays. And the reason I want to do that is because many of you, I've gotten some questions recently about how to leverage, the daily play ideas that we send out every day. So just a quick question: how many of you follow our daily play trading ideas every single day? Just so I get a feel for who's in the room. Okay, so it looks like the vast majority of you in some way, shape, or form follow the daily play ideas that we send out. A few of you don't know what that is, and that's okay. Once you sign up for a free trial at OptionsPlay, you will receive our daily trade ideas that we send out. We send out not only an idea on an individual stock, but we also send a trade that corresponds with that idea. And some of the questions that I've been getting recently is, people feel that the markets sometimes move and they are not able to get into the exact trades that we're suggesting. So what I really want to do is show you guys not only how to find your own trading strategies on the stocks that you're looking for, but also if you're looking at the trade ideas that we're sending out and the market has moved a little, but you still want to get into that trade, how you can utilize our platform to find the appropriate trade to make, okay? So our platform is designed to, as you can see, most of you are following the daily play ideas. So I want to show you guys how you can utilize any views, including the stocks that we show you in the daily plays, and how you can quickly find a trade to make on those specific symbols. So let's start with, let's go back to Microsoft real quick. So we're looking at Microsoft. It's got a very strong technical score. 1 month and 6 month trends are very bullish. So let's say you're looking for some bullish ideas on Microsoft. So you're going to see two buttons here at the bottom of your screen. One says I'm bullish, one says I'm bearish. So when you click on I'm bullish, you're going to be presented with 3 bullish strategies: buying 100 shares of the stock, buying 1 call option, and buying a call spread. For those of you that are relatively new to options trading, the call option, the single leg, is where you want to start. And for those of you that have a bit more experience, you might want to take a look at that call spread, which gives you some additional benefits by reducing your risk and lowering your break-even price on your option. So these are the 3 strategies that most retail traders are trading, which is why we are providing you this as a starting point. And the reason that we built this platform was because we looked at the user experience of trading options for most people. And that user experience usually starts with a page that looks like this. You have all your calls on the left, your puts on your right, and you have a lot of different numbers in between. And what we realized is that most people really struggled with figuring out exactly what this page meant, what all the numbers meant, and let alone, once you learned how to navigate this page, the problem with it is the fact that once you've picked an expiration or strike price, lots of times that's really based on nothing but just a guess of where you want to start. And once you do some analytics, you might have to go back to this chain to pick a different expiration date or different strike price or different strategy. Let alone if you're brand new, you might not even know where to start. So that's why we wanted to provide a brand new user experience to options trading that remove the chains from that experience so that you can have starting points that you can look at without having to pick anything first. Analyze it, explore it before you can decide, hey, is this something that I want to get myself into? And that's really what the tools that we built is to help you teach you or help educate you on the performance of each one of these strategies so that you can actually say, hey, if I'm traditionally used to buying the stock, can I buy an option instead of, or if I'm buying a not call option, should I look at a vertical instead? And our P&L simulator is really designed to help you learn more about options and learn about these strategies and say, how do I actually trade these strategies? So as here, I have Microsoft, it's trading at 109. You can buy 100 shares of the stock if you're bullish. You can buy this call option or you can buy this call spread. So when we analyze any of these strategies, what we're really trying to do is just compare the two and say which one do I want to trade. And one of the best ways that you can do that is using our P&L simulator. This is designed to give you a way to actually compare one strategy to the next that you're not able to do when you're using the option chains. So what we have here is Microsoft's trading at 109.67 right now. So what happens if you think the stock's going to go up to its 52-week high, 111? As you can see, if you had bought the stock, you make a 1% return. If you bought the call option, you make a 7% return. If you bought the spread, you make a 20% return. So right off the bat, I can see that, I probably would want to trade this call spread here on the right if I think the stock's going to move just about $1.50 above. This might be the strategy that I want to choose out of these three. But I would say that a stock moving a couple of dollars, especially Microsoft, over the next 45 days, this is looking at the September expiration, is pretty conservative. I would imagine that if I'm bullish on the stock, I would expect a move a little larger than that. So let's say I think it's going to move up to maybe, let's say 114. This allows you to actually see, well, what's the impact of these trades? So as you can see, if you bought the stock, you make about a 3.7% return. If you bought the call option, you make a 60% return, significant boost over buying the stock. And now you make an 80% return if you had bought this spread here on the right. This is really designed to help you compare different strategies and quickly identify what are the performance expectations of each one of these strategies, both if you're correct, but also what happens if I'm wrong? What happens if Microsoft goes back down to 104 or even 102? In a worst case scenario, what am I risking here? So if you had bought the stock, you lose $788 versus if you had bought this call option, you lose $560. So about 2/3 the amount that you're risking here. But if you had bought this this vertical, you only risk $498. So now I'm starting to see the picture that if I'm wrong, I actually lose less money on this spread here on the right. But if I'm right, I actually make the most amount of money or potentially a higher return by buying the spread. So this is where, depending on how far you think the stock's going to go, it will tell you exactly which strategy will give you the highest return. So this allows you to quickly start playing around with these strategies and seeing and identifying where you want to place these trades and which trades that you want to make. And for those of you that are brand new and maybe you've heard of a concept called the Greeks and you might be a little confused by them, and I promise you they are confusing. One of the things that we want, the approach that we take with the Greeks is that instead of having to learn the Greeks and learn how to calculate on your own, we actually do all the calculations for you. Because what you're really concerned about when you're learning about delta is when the stock price moves, how much does my option price move? And that's really what this price slider is calculating for you. So if the stock moves higher, how much return do I get? If the stock moves lower, how much risk do I have? That's what delta is supposed to tell you, but it requires you to do a lot of math. We take that math away from you, so we just tell you the net result, which is really what you're looking for. And then if you learn about theta, which is time decay, that's really what the time slider here is doing. It's showing you how time affects the price of your option as you hold it to expiration. And lastly, for those of you that are trading or a bit more advanced, you might learn about Vega or volatility. You can see the impact of that on your option pricing as well. So this is really where we get into the practical uses of options without boggling you down with a lot of terminology and a lot of numbers. This is really designed to allow you to quickly type in any single stock and within a few seconds start to see some starting points for how to take advantage of either a bullish or bearish move on any given stock. So let's take a look at GE. We said before this is a weak stock. It's got 1 month and 6 month trends that are bearish. Maybe we look for some bearish opportunities on GE. So as you can see here, you can short the stock, or you can buy a put, or you can buy this put vertical. And what we want to do is provide you with the tools to compare these three strategies and say which one's actually best suited for you. So what happens if you think GE is going to go back down to its 52-week low around 1250? Here, if you shorted the stock, you make about a 3% return. If you bought this put, you make a 13% return. If you bought this vertical, you make a 42% return. Very interesting way to compare strategies side by side. And this really allows you to play around with how far you think the stock's going to go. It also even gives you an idea as far as when one strategy starts to outperform the other. So as you can see, as the stock moves below 1175 or so, that's when the call starts to outperform the call vertical. That's something that you couldn't do if you're looking at the chains. You couldn't even do that, compare one call to the next, let alone compare a call to a spread. These are not the type of calculations that you'd be able to do from an option chain. But we wanted you to be able to see these types of calculations because it's really important for you to decide, should I buy a call or should I buy a call spread? Or should I just short the stock? These are the types of things that you need in order to be confident in your options trading, is knowing your risks and knowing your potential rewards ahead of time. So that's why we provide these types of trades, these types of tools to help you quickly identify what are ideal starting points, and then how do you analyze those starting points so that you are familiar with your risks and rewards before you place a trade, so that things don't surprise you after you get into a trade. And if, let's say, you're looking at a trade on OptionsPlay and you decide, the September 21 12 by 13 put vertical is the trade that I want to make, one of the things that we realized that a lot of beginners were unsure of the risks that they were taking. So what we created was called a strategy checklist. This is designed to make sure that you understand the risks that you're trading. So we wanted to make sure you understood that, whether you're trading with the trend or not. So if this is telling you you're trading with the trend of the stock, but you're trading against the trend of the market. The OptionsPlay score here is pretty good. There's no earnings between now and expiration, which is something that we see a lot of beginners tend to overlook before they place that trade. And lastly, spread and liquidity, a very important factor to remember when you're trading options that you may not be familiar with or may not be concerned about when you're trading stocks, but it is certainly something you want to be aware of when you're trading options. So understanding how liquid something is before you get into the trade is very, very important, and not figuring that out when you're trying to get out of that trade. So our strategy checklist provides you with a last step of checks to make sure that you understand your risk. And once you're ready, we give you all the details on how to enter this trade into your broker's platform so that you're able to enter this trade at whatever brokerage firm that you trade with in order to execute your trade. So this is designed to allow you to quickly type in any stock, instantly see the 1 month and 6 months trend and the relative strength to help you gauge a directional view. This allows you to type in any stock and without having to pull up any charts, without having to look at any fundamental data, to very quickly gauge a directional view on the underlying stock. So for those of you that are fundamental analysts, you can use this tool to help you time when it's time to get into a trade based on those trend indicators. Very, very important use case for regardless of what type of technical analysis or fundamental analysis you use. This is a great way to quickly do a quick check on the work that you're doing outside of OptionsPlay to see if it lines up with, if the indicators that we're showing lines up with your views in the underlying stock. Now, what I want to address is the questions that I've been recently getting about the daily plays. So I had a few comments that, on the Amazon trade, by the time that the market opened on Tuesday, or I forget which day it was, but on the next day when the market opens, people felt that the market had already moved a little and they weren't able to get into the exact trade that we were specifying. And that's really the power of OptionsPlay, is that you don't have to just follow our trades blindly. You can type in the stock when the market opens and see whether the new options, the new vertical that we're showing you here makes sense for you still, because maybe the market has moved in the strikes and you should be trading different strikes. But that's really why we created OptionsPlay, so that you don't have to just rely on someone else telling you what to do. You have the tools to find the trade on your own, analyze it on your own, and potentially trade a different trade than what we're telling you, as long as you still agree with our underlying views that Amazon was bullish. And this has had a very nice move up since the day that we published this trade. So even if you didn't get in at the exact same strike prices, the exact same prices that we get, most of the trades that we send out last at least 1 to 2 weeks. So even if you don't get in at the exact same price that we suggested it at, you should be able to still get in at some reasonable price, unless the market is just simply gapped a lot, which hasn't happened very often. But when it does, there's nothing we can do to prevent that. But when it doesn't, these are the tools that you can use to help you find the right trades to make for yourself. In addition to that, if we put out a bullish trade on Amazon and you completely disagree with us and you think that we're completely wrong and we should be bearish, we give you the tools to be able to find a bearish trade if you disagree with our ideas. And that's really something that no other platform or service provider provides you with. You know, when someone else provides you with a trade signal to buy some option that you should trade, there's no real way for you to find alternatives or contrarian trades if you disagree with their analysis. That's the power of our tool, is that you can use our platform, put in any symbol, create a watch list, instantly get a directional view using our trend and relative strength analytics. And if you find a stock that you have a bearish or bullish view on, you can quickly, instantly find an option strategy to actually trade off of that. So as you can see here on Johnson & Johnson trading at 131, if you're bullish on Johnson & Johnson and you think, let's look at Johnson & Johnson here, and you think it's going to go back to, let's say, that 135, 136 support resistance level, then you can quickly type that in and say, well, if the stock went up to 136, normally if I bought the stock, I would only make about a 3.5% return. But if I bought this call option, I make 123% return. And if I bought this spread here, I make 139% return. And this is where you can get into really explosive trades by taking the directional view that you get with OptionsPlay and turning them into returns that you couldn't get by trading stocks. And at the same time, if you're wrong, which if you're trading, I don't care what you trade, there will be times when you're wrong. The reason that we love trading options with these directional trades is the fact that no matter what happens, our risk is limited to what we've paid for that option. So here I've paid $13,000 for 100 shares of stock. That's my risk. So if the stock drops by 5%, I'm risking $600-700 versus if I'm buying this call option, no matter what happens, the most I can lose is $209. So even if Johnson & Johnson craters and goes down to zero, I'm still only losing $209, not $13,000. And that's really the asymmetrical risk reward that you get with options that you don't get with trading stocks, that makes these directional views so useful with these types of options trades. So that's really what I hope to provide you guys here with today, is a way to understand how to utilize our tools to quickly gain a directional view and then instantly leverage that into an options play, all within just a few seconds, not having to do a lot of research or spend hours and hours looking at different indicators and different tools to find these types of ideas. That's really why we built this tool, and that's why I wanted to spend the time here today to show you how to use these tools to do the same thing on your own. So with that, I just want to thank everyone for taking the time out this afternoon. At this point, what I'll do is I will open this up for questions and answers. If you have any questions, please type them into the chat window. Like I said at the beginning of the webinar, this webinar is recorded, and I will send out the email in about 30 minutes after the recording, and they will include the slides. So I highly recommend, for those of you that are new to OptionsPlay, check out the links in those slides, because it will help you show you all the rest of the webinars that we've done, the historical ones, how to see the daily play ideas that we're talking about today, and then also the links on how to follow us to YouTube and subscribe to OptionsPlay. So thank you, everyone. So I will answer as many questions as I have. Please type them into the chat window, and I will try to answer as many as I can. Which moving averages do you use? Just curious. So we use the 20, 50, and 200 day, but we don't use the traditional simple moving averages. We use proprietary moving averages. But you know, the key here is not which moving averages you use. The key here is using the same ones consistently day in and day out. That's what I have found successful traders do, is they don't necessarily, it doesn't really matter what strategy they use. It's just a matter of applying the same method day in and day out. And that's really what our trend indicators and relative strength indicators provide you with, is because you can't change those settings. So that's why you're applying the same settings every single day. That's how you're able to gain that consistency. It seems that you use CCI, Commodity Channel Index, to help identify trend reversals. So not really. So we do use CCI in some of our trade ideas, but we don't use them in the technical ranks, which is what we really use to gain a view. And reversals is really based off of our trend indicators. So we usually use the trend indicators to gain a reversal. Michael's asking, is the directional edge watch list something that we created? Yeah, so this is just, this is randomly created watch list that I created. I just named a directional edge for this specific webinar. This is not by any means a list that has specific names, and I just threw in a bunch of names in here just to show you for illustrative purposes. This by no means is an indication that you should trade any of these securities. So this is just the watch list that I made just for this webinar. Brian's asking, is there any way to get real-time data? Great question. That's something that we're actually currently working on with one of our new market data providers, is to be able to provide you guys with real-time data. Currently, market data is delayed by 20 minutes. Venkat's asking, I've been a subscriber, but I get the daily play emails only once in a while. Venkat, they get sent out every single day at 6 a.m. every single day. So I would just make sure that it's not going to spam, but I guarantee you we're sending it out every single day at 6 a.m. What are the red and green horizontal lines on the chart? If you're referring to these are actually support and resistance levels that we calculate for you. So it's the same levels that you see at the bottom of your screen. It's just these support and resistance calculators, proprietary support and resistance calculators, resistance levels that I've worked on very hard myself, that I've built over the years as an experienced trader, learning how to identify support and resistance levels, and these are built on the charts for you. When do you release the options play ideas? It's at 6 a.m. Eastern time every single day. It's at the same time, and it gets emailed to everyone in our list. So if you have a free trial or a subscription, you get the email every single day at 6 a.m. Will there be a pick tomorrow? I didn't get one today. So today we sent out a closing email. So we send either a closing email or an entry email every single day at 6 a.m. So yes, we do release every single day, but sometimes it's just a notification to close out an existing trade, but we always send one out. Roger's asking, does that apply to spreads? I'm not sure which question you're referring to, so if you could clarify that, that'd be great. Jeanette, you're very welcome. I hope you guys find this useful. Does your system work on ETFs? Absolutely. So you can type in any ETF and do the same thing. We actually have the sector ETFs. So, and this is one of the things that I look at first thing every single morning as I talk about using sectors to help you identify high probability setups. So you have a pre-built watch list called Sector Spiders. Every single one of you has this by default. And I usually sort this by the score, and this allows me to quickly identify what are the strong sectors and what are the weak sectors. Really important place to start. I have a question saying, is Facebook considered a bullish turnaround? Great question. So I would certainly consider this in the camp of bullish turnaround. This is a bit of an anomaly because usually bullish turnarounds are stocks that are starting to turn over. Facebook obviously had a huge gap lower. So yes, but this would certainly be in that category. Frank, do you see immediate market reaction to your daily plays? Are we influencing? Frank, I'd love to think that, but I don't know that we're large enough to be perfectly honest. But there probably is some volume due to that, but I don't think it's large enough necessarily to move the markets. Is your platform designed to interface with interactive brokers? So we don't necessarily interface with any individual brokers unless a broker has actually embedded our platform into their platform. So that's why we are completely broker agnostic, and we prefer to keep it that way. We don't prefer one broker over another. You know, I myself trade at TD, but that's not, you know, our clients trade everywhere. We're not necessarily endorsing or paid by any broker. So this is really designed to allow you to enter these trades into any brokerage platform. Are all your examples spreads or debit spreads? Do you not employ credit spreads? So you have every single strategy that you can trade under the sun here. You can modify this strategy and trade all different types of strategies. So if you're bullish and you want to sell a credit spread instead of a debit spread, you can do all of that. We default to these three strategies because these are the three strategies that you actually should deploy if you have a bullish or bearish view. Credit spreads is really more of a neutral view or modestly bullish or bearish view. It's not the ideal use for if you have a bullish or bearish view, but you can use credit spreads, but that's for those of you that have more of a neutral view on an individual stock. So you can click on modify and use our strategy constructor, and you can construct bullish and bearish credit spreads all here. You can do butterflies, condors, straddles, all different types of strategies are available to you on our strategy constructor. Amar is asking, what does the options play symbol denote when displayed against certain trades? Great question. I think that came up on the Amazon trade, I think it was. Really, really good question. So on the Amazon trade, which when it loads, I will come back to in 1 second, I talked about the strategy checklist. So if any of you that have ever used a strategy checklist, you'll know that what we do is we have, it's all color coded for you. So as you can see on Amazon, this trade had a options play logo next to the 102 score. That just means that every single thing on the strategy checklist was green. That's when you get the options play score. So everything is lining up. You're trading with the trend of the stock, trading with the trend of the market. You have good options play score. There's no earnings coming up, and it's very liquid options. So that's when you get that options play score. Great question. Can you quickly cover the income feature for cover calls? I will do that very, very quickly, but I have a lot of questions to get through on this particular trade. But for those of you that like to sell options for income, we do the exact same thing that we just showed you on how to do this for trading, but for helping you identify ideal starting points for cover calls and short puts. We have income settings here at the bottom so that you can set short, medium, or long-term options that you like to sell. You can set your risk tolerance here. You can set these independently of each other for calls and puts. So you can select aggressive puts and then conservative calls. Whatever your settings are, once you save that as default, whatever symbol that you type in, we will go out and find the ideal cover call and short put for the stock that you're looking at. This is designed to basically save your time from researching cover calls from a few minutes down to just a few seconds, because any symbol that you type in, you don't have to pull up an option chain ever again. You get sent to the ideal starting point based on your personal preferences. So that's just a very, very quick overview of the income settings. For those of you that are interested in income settings, highly recommend you to take a look at our webinar recordings, because I have done a specific webinar on just that. And I actually have a webinar coming up in 2 weeks on selling options or selling cover calls, and we're going to go over that income tab. Unfortunately, I think I may have to move the date of that webinar. I'll let people know in the next couple of days. Normally we do webinars every Thursday, but in 2 weeks I may have to move that to a Tuesday. So just to give you a heads up real quick on that. Dustin, my watch list doesn't have a directional edge. Like I said, the directional edge is just a watch list that I made, and it's not a directional edge watch list. It's just one that I named that for this particular webinar. So you can name these whatever you want. I just happen to name one specifically that for this webinar. Stanley is asking, how much do you want to invest work? Great question. So what we have here, so if let's say you're looking at Pepsi and you have a bullish view on Pepsi, chances are you may not necessarily trade one contract. So what we have is a risk and investment calculator. This is designed to give you a quick view on how to quickly figure out how many contracts to trade. So, and what we do is we have two different ways to do this. And because depending on whether you're a stock trader or you're an options trader, you usually think in different terms. Stock trader usually thinks about how much money they would invest in the stock, and options traders usually think about how much money I'm willing to risk. So that's why we have two options here. So if let's say you were typically buy Johnson & Johnson stock, I'm sorry, I forget, this is Pepsi. Let's say traditionally you'd buy, I don't know, $50,000 in stock, you can do that, and what we can do is we can calculate the appropriate number of contracts that you would typically buy instead of buying that number of shares. Or you can say, I'm willing to risk $5,000 on a trade. And now what this does is it changes your contract so that you have an absolute dollar amount that you're willing to risk. So that's really the difference between the two. It really depends on whether you're a stock trader and you're thinking about how much I invest, or if you're an option trader and you're thinking about how much I'm willing to risk. Albert, thank you very much. I really appreciate that. Stanley, is there a watch? I'm not sure what you mean by is there a watch. If you can clarify, that'd be great. What is the number in the circle of the vertical spread? That's the options play score. Great question. The options play score is basically telling you how much potential reward there is on each trade, the amount of green on your chart versus the amount of red, which is the potential risk. And what we're doing is we're weighting that risk to reward based on the probability of you actually hitting those numbers. And that's how we gauge a true risk to reward. And the reason we do this is because when you're buying a call, the reward is unlimited. So how do you actually calculate risk reward on something that has unlimited reward? So that's really, we decided that we wanted to give you a quantifiable way to truly gauge what is the risk reward of each trade and actually help you compare it apples to apples next to each other so you can see which strategy gives you the best risk reward, even if you're comparing different types of strategies. Jay is asking, so for debit spreads, do you default to delta buy 50, 60 and sell the 10 to 15? Absolutely. So that's exactly what we're doing. Is we're usually trying to buy somewhere in the 50 to 60 delta range on the long leg. And then we usually want to sell roughly about a 15 delta call against that, because the 15 delta call usually brings in just enough premium to offset about 10 to 20% of the long call, long legs premium, but also is far enough away so that you have a relatively low chance of hitting that strike. So that's exactly what we do, Jay. Great question. Marlene's asking, I'm confused. J&J looks like it's ready to be bearish. Let's take a look at Johnson & Johnson here. So based on our trend indicators, this certainly has pulled back, but as you can see, that's only pulled back less than $2 from the high. So not even, about $1.50 from the high. So I wouldn't say that this is pulled back far enough for this to be bearish. It certainly may be the start of a bearish trend, but it certainly has not pulled back, in my opinion, far enough for it to be bearish. And that's really why we want to use these indicators, because if you use different indicators, sure, there may be some indicators that you're going to find that it's going to say that this is bearish. But when we use the same indicators day in and day out, and we don't change the application of those indicators, we can really rely on them. And that's really what I'm trying to teach here, is not necessarily what indicators are better or what indicators are worse, just using the same ones reliably day in and day out. That's how you're going to be able to gain consistency. What about breaking a spread to capture any possible profit on a losing spread? Amar, I think that's just a little bit outside of the scope of what we're trying to accomplish here today, and I have a lot of questions that I want to get to. Regarding that specific question, Amar, please send me an email at info@optionsplay.com. I'm happy to answer your specific question about breaking a spread apart. When is your next live video? So we do webinars every single Thursday. So every single Thursday, we send out the full schedule, I think, out every single Monday. So you can sign up every single Monday, and we also do weekly emails to remind you to sign up for the webinars. But every single Thursday is when we do that. Anthony, you're very welcome. Roger, does your system work for bull put and bear call? Absolutely. That's just what I talked about here a few minutes ago. You can click on modify. Use this for short call vertical or short put vertical. This allows you to put those bull put and bear call spreads. James is saying, I see Johnson & Johnson as a dividend in August. Generally speaking, when you're buying options, dividends is not really something that affects the trade. Dividends is really something that affects you when you're selling options and you have an option that's in the money. So generally speaking, no. If you don't get filled on the daily email, is it just let it go or give it a 5 to 10% from recommended buy? So Michael, this is again where that's up to you, right? So what we're saying is our ideas, like I said, is generally good for at least 1 to 2, sometimes 3 weeks out. So if you don't get filled within the first hour of trading, in my opinion, you generally still have plenty of time to potentially get filled on a trade. So, on the latest trade that we have with Salesforce, the market did move up a little higher right after we placed that trade, but I think you had plenty of time to use our platform, log in at 10 o'clock, 10:30, even 11 o'clock, and see what spreads that we're spitting out at that time and maybe execute one of those spreads. Even if you don't execute the exact same strikes that we're telling you to do, this tool is designed to allow you to find better trades at the time that you're actually executing the trade. Maybe you don't see the email until 2 o'clock in the afternoon, but you still think Salesforce is bullish. So use our tool to find a new trade at 2 o'clock in the afternoon if you missed out on the 9:30 trade. That's really what I'm trying to teach here today, is don't just follow our trades blindly. Use the tool. You can find other trades. Maybe you find a better trade than we do. I'm not necessarily saying that we found the best possible trade. These are just ideas. You can use our platform to find potentially even better ideas, or ideas that work better for you, right? So you may have a more longer term bullish view on Salesforce. So you might want to take longer dated options. So you might want to change this from September to October, and look at October options and the September options. That's really the flexibility that we provide. Do you always send closing emails? Absolutely. So we always send closing emails for all the trades that we make. Tim's asking, I thought the Disney calendar put leg was to decay on its own without having to manually close it out. So that's completely up to you as to how you want to play that trade. You know, we were up 50% on that trade in 2 days. I'm happy with the 50% gain in 2 days, so I took that. You know, I usually don't have problems taking profits. Certainly, you could have let that go and potentially made more profits, but that's really where, you know, our philosophy is: don't be greedy. If you've made more money than you expected to make in a short period of time, it's always a good idea to take some profits, especially since the markets have been going up and up and up for quite a period of time. You know, there's always the longer it's been going up for, the more downside risks there are. You know, we've seen some pretty nasty down days, and sometimes those wipes out a few weeks of good long trades. So at this point, I'm pretty happy taking some profits, especially on some of the long trades that we have out there. How do we check the daily volume of a specific option? We generally don't, and that's really, we do this for a reason, because volume in open interest is not a gauge for liquidity. We use the spread between the bid and ask price. So as you can see, we look at the bid and ask price, and it's in the spread and liquidity indicator that we show you. That's a much better gauge for liquidity. We never use options volume or open interest as a gauge, because that's not a very good indication of liquidity. How do you target exit from daily play? Bob is asking. So it's usually based on two things. Either the stock has hit our target price and it's time to exit, or we have rules in terms of when we take profit and cut losses. We've actually done a specific webinar on this. For debit spreads, we want to take profits when we hit that 75 to 100% gain, and we want to cut losses when we've lost about 50% of the premium that we've paid. So those are the general rules of thumb that we use for taking profits and cutting losses. Stochastics and RSI looks like it's heading down. So Marlene, again, this is where, if you want to look at all these different types of indicators, there's always ways that you can find either a bullish or bearish view on any given stock. But that's what we're trying to teach, is we're trying to simplify your life. You don't have to look at stochastics. You don't have to look at RSI. You don't have to look at all of these indicators. These two indicators we've distilled down to what's really what you're looking for, is what is the trend and what is the relative strength. Are there other ways to identify trend? Absolutely. Are there other ways to identify relative strength? Absolutely. But what we're trying to teach is a consistency to it. So a lot of times people that use stochastics and RSI and all the other indicators, is that there's no end to what other indicators you'll use. So that's really why we want to teach simplifying your life, not looking at all of these indicators, just to be able to have one indicator that you can reliably rely on to give you that directional view. Any other option strategies like calendar spreads? Also, yeah, absolutely. Like I said, on the modify button, you have all different types of strategies. We have calendar spreads, diagonals, ratios, collars, synthetic stock, butterflies, condors, all different types of strategies are all available to you here in your strategy constructor. How do you bring up that strategy checklist? You simply click on the trade button, and it's right here on your trade ticket. You can click on the strategy checklist to expand it if you want. Otherwise, you can just take a look at the color coding. It gives you that color coding right here on the right-hand side. Are the daily play suggestions given a mix of technical and fundamental analysis? No. So it's all based on mostly technical analysis. Like I said, exactly what I explained to you here before. This is what we use to find our daily play ideas. We look at top-down approach, we look at the overall market, then we look at strong sectors, then we look at for strong stocks. That's how we identify bullish stocks, and then bearish stocks, we look for weak sectors, and then find the weak stocks within those weak sectors using the framework that I just showed you here today. That's exactly how we find our daily plays. And you said by the time we act on the daily play, all the numbers have changed. Advise how to adjust if you still want to make the trade. You don't have to make any adjustments. That's the point, is you just type in the symbol at the time, whenever the time let's say you log in at 11 o'clock instead of 9:30, and today we're bullish on Coca-Cola. You just type it in, and the platform automatically spits out what are the optimal spreads at that time that you put it in. So you don't have to adjust on your own. It automatically does it for you. That's the power of our tool. It's always pulling in the latest prices to giving you the optimal spreads at that time. So how can I trust options play versus my analysis? Again, we're not saying our analysis is better than yours. We're just saying that our analysis is consistent in and day out. That's how we're able to simplify our lives. That's how we're able to gain consistency in our trading. If you have your own system that you feel works, by all means, we're just showing you an alternative way that we have proven has worked, and we have the track record to show you that, we've been doing these trade ideas for 4 years now. We have the track record to show you that this methodology does work. We're not saying that it's better than yours or worse than yours. We're just saying that it's a methodology that simplifies your life and seems to have good results in the long run. Do you send close emails for all recommended options? Again, we do. If you don't get filled on the daily email, I think I answered that question already. If the market direction changes while in the options trade, is there a way to mitigate any potential losses? I don't know there's any way to necessarily mitigate potential losses, but the one thing you have to understand with any trade is that it can move against you. So the most important thing is that you understand how much can it move against you, and if it does, what is your expected losses? It's really important to not only understand your potential gains on the trade, but also your potential losses. That's how you're able to not get surprised in a trade. So if the stock starts to turn around, you know exactly when to cut your losses, and you don't have to have this emotional tie to your trade. You know exactly when you're going to take profits and when you're going to cut losses. What is the significance of the check mark next to the options play score? That's just telling you which one of these strategies has the highest options play score. That's it. I prefer to evaluate credit spreads on my total risk. Do you, with that formula? Sorry, Jay, I'm not sure what ROR referring to. If you could let me know, I'm happy to answer that question. Do you send notices for all daily play exits? Yep, so we do send those out. So that's exactly one of the ones we sent out this morning was Disney. We're telling people to take profits on that trade that was sent out on Monday. What is the call for your system? I don't know what you mean by what is the call, Roger. If you can rephrase that question, happy to answer that question. Do you include OTC equities? So some OTC equities are in here, but obviously no OTC equities have options on them. So generally speaking, we don't cover those very well. Where do I sign up? So if you don't have access to OptionsPlay, you sign up at optionsplay.com. Really, really simple. What is the color of the circle? Color of the circle is really color coded to give you an idea of risk to reward. So anything with the low risk to reward will have, average risk to reward will be yellow, and then low risk to reward will be red. So this tells you basically, am I getting enough? How cheap or how expensive is this option? That's what's really the options play score is telling you. If the market changes, I believe I answered that question. Does the trend indicators impact the overall score in the simulator? No. So very important question is that the options play score does not have a directional bias. The options play score is simply looking at the potential possibilities, and it assumes an equal possibility of the stock moving higher and moving lower. So it doesn't have a directional bias. Max number of stocks allowed in one watch list. I think the maximum is 300 stocks in a watch list. Tools to screen stocks based on parameters like 52-week high, IPO, Bollinger Band squeeze. So, Nathan, so we don't have some of those scanners, and a lot of your brokerage firms already have those scanners, so we don't have any of them. So that's why we have our watch lists. Our watch lists are designed to basically allow you to do that. Our watch lists are built in a way so that you can quickly identify based on what I've just showed you here today, which stocks are strong, which stocks are weak, which stocks are starting to turn around, which stocks are continuing to strengthen, which stocks are continuing to weaken. I can do that from our watch list instantaneously for any list of stocks that I'm looking at. That's really why we built our watch list this way, so that you don't have to set up all of these different scans just to find the stocks that you're looking to trade. Can you find the daily option recommendation later in the day? Yep, so it's all available at optionsplay.com/dailyplay. So all of our trade ideas that we send out every single day is available at optionsplay.com/dailyplay. Raymond, thank you very much. I really appreciate it. Are any of your transmitted trades tied closely to any of your watch lists? No, so the trades are completely new ideas that we come up with every single day. They're not necessarily tied to any specific watch list. Is there a listing of the daily play on the watch list? Yes, again, on optionsplay.com/dailyplay. Caesar, thank you very much. What do you mean by put a limit on? I'm not sure what you mean by that question. Do you offer a special price to sign up now? No, we offer the subscription rates the same price for everyone. I think it's a very, very reasonable $50 a month or $500 a year for this type of platform. I think you'll find most options platforms out there run multiple times, multiple factors of that pricing. We think that we are very reasonable price, and that's really why we built this. We wanted everyone to have access to this, not just the professionals. You know, a lot of the other platforms out there charge a few $100s a month, and we really wanted to not do that. We wanted to offer a platform that everyone could access. How much room does your plays give for selecting a premium price? Most times my orders do not get filled to the limit price. So this is again where I'm saying that a lot of times that when the market opens, maybe the strike prices change. And that's really the power of this tool, is that you can use this tool, type in the symbol at the time. Maybe you have slightly different strike prices and get filled because we're always giving you the current price. Now, I will say there's a lot of leeway in terms of where you get filled based on your brokerage firm. I use a lot of market orders because I trade at TD, and TD has very good execution on market orders depending on where you trade. I don't use a lot of limit orders because they spend too much time working those orders. I get pretty good filled using market orders myself. You may have different experiences as your broker, but generally speaking, most of the major brokerage firms will give you pretty good fills on the top 200 names when you're trading options using market orders. So that is one of the ways that I get my orders filled, in my opinion, at the prices that I want. But you can play around depending on your broker. And if you have specific questions regarding that, shoot me an email at info@optionsplay.com, and I'm happy to answer those questions. On your ideas panel, the color band on the left does not always match the arrow. What's the reason for the difference? I don't know what you mean. You're saying that this doesn't match the 1 month and 6 month trend? I believe they always do. If you have a specific example of that it doesn't match, please let me know. But they generally do. Return on risk. Related to option buying power reduction, since it's the true risk on a credit spread. Jay, you're right. So we use the credit received and not the margin requirement on calculating returns, and I understand what you mean. That is something that's a good feedback that you've given me. I'll definitely consider that in our future releases on calculating returns on credit spreads. Alfred, thank you very much. I really appreciate it. Jackie, thank you also very much. Caesar's asking, when you put your order, you said to put in a limit. Oh, that's just referring the order type. So when you enter an order, you can put it in as a limit price or a market order. Like I said, if you trade at one of the major brokerage firms where you know that they have very good execution quality, like I do at TD, and generally if you trade at Fidelity, Schwab, E-Trade, that's generally the case. I place a lot of my orders at market orders because I only trade pretty big names. I don't trade a lot of the small cap names where liquidity is not there. When I'm trading big names like Amazon and Salesforce, I just put in limit market orders because I get really, really good fills at these major brokerage firms. So if you trade the major names, like the ones that we generally place in our daily plays, we usually don't do small cap names or anything like that. You can try placing some of those with market orders and see where you get filled. On T, it says yellow band, but green arrow. Let's take a look. T? I don't know where you see T on trade ideas. Amar, I don't see AT&T on the trade ideas screen. Pepsi. Where's Pepsi? I also don't see Pepsi. Where do you see Pepsi on this? So as you can see, Pepsi has a 1 month trend is neutral and 6 month trend is bullish. So there's two arrows. There's the 1 month and 6 month trend. So make sure you're looking at both. The Canadian version of OptionsPlay only has one per published watch list. That is correct. if you're, oh, I have a question here about logging out. So you can actually set your logout sessions in your profile. So when you go to profile, account settings, you can choose your timeout period. So you can, I think it defaults to 20 minutes, but you can certainly make that longer if you're getting timed out a lot. So I'm way past my normal hour that I do these webinars on. I really appreciate all the questions. I really appreciate you guys spending the time out this afternoon and taking all this time to view this webinar. I really hope that you found this useful. This is really one of my favorite topics because it really embodies all the things that you know, that made me start this company when building this product. And I hope that this is useful to you guys to help you guys simplify your research down to from a few minutes down to just a few seconds for every single stock, and then helping you leverage that into an options trade that hopefully makes you significantly more profit with less risk than just buying or selling stocks. So like I said, thank you very much for joining me this afternoon. The webinar recording will go out in about half an hour with those slides. So if you're brand new to OptionsPlay, make sure you take a look at some of those links in the slides. It goes to our previous webinars, shows you how to subscribe. And if you have any questions, feel free to email me at info@optionsplay.com. Thank you, everyone. I hope you guys have a great afternoon.